Been talking about Asian markets are in the red today and taking their cue from what happened on Wall Street after ratings agency Standard & Poor's downgraded the debt ratings of three of the biggest U.S. investment banks. Well, that downgrade has renewed fears that the credit crunch is far from over. Let's get some perspective now from our first guest, Dariusz Kowalczyk, Chief Investment Strategist at CFC Seymour. He joins us live from our Hong Kong bureau. Dariusz, what's the bigger deal here for the Asian markets today? The fact that S&P downgraded the three big investment banks, or the fact that the Wall Street Journal is now reporting that Lehman could actually report its first ever loss?
I think that both are very negative because investors had really high hopes that most of the credit crunch is behind us, and now it seems that further write-downs are coming our way, and that the risk of the banking system overall is increasing as the credit action indicates. And this will bring the memories of what happened earlier this year when such risk was perceived to be high as investors' appetite for equities withered, and we had huge declines in stock market indices, gains in bond prices, and so forth. So investors will be asking themselves if we are in for another round. And I think that over the summer we will have another round, maybe not as dramatic as in the first quarter, but still further declines in financial sector are ahead of us.
Dariusz, it's Rebecca in Europe here. Do you think there's anything new that S&P see in this sector, or do you think they're just kind of catching up with what really we already know about what's going on with the financials?
I don't think there's anything that they would know that the market doesn't yet. Actually, what happens is that rating agencies use models that look to the near and medium term and probably have to adjust for the value of the banks as assets that they hold decline in prices in line with the U.S. housing market. And we saw U.S. house price data yesterday, which showed very steep declines. So as these models suggest that these assets are declining in value, ratings probably have to be adjusted. At the same time, the markets have sort of looked beyond the near to medium term, focusing on the longer term prospects as policymakers have come with a lot of support. And now markets have to reassess that view and probably refocus on the near term, where outlook remains quite grim.
Thanks so much for that. That was Dariusz Kowalczyk, Chief Investment Strategist at CFC Seymour. Thanks for joining us today.